All right, guys, it is 7:33, 7:34, and I'm going to go ahead and get started and welcome you all to Capital Conversations. My name is Faya Webb. I started Leaving a Legacy Investments. I'm here today with co-host Brianna Peters of Soul Investor and our guest speaker, Todd Snelling, who is going to kick off our three-part series about the anatomy of a deal. A lot of us have met through a mastermind group, and in that mastermind, we get a lot of training on how to find properties, do run the numbers to see if properties are a good deal, sending out LOIs to get when we want to make an offer on the deal. There are quite a few of us, based on conversation that we've been having, that don't know what happens after that, which sparked the idea for us to do the anatomy of the deal. Todd Snelling of Big Bear Capital just recently closed on a 100+ unit apartment building, so he is fresh off of this entire roller coaster of a process, and he'll be able to share with us what happens after the deal. And the first of these three parts is going to be on the PSA. Brianna, you have any opening comments before we turn it over to Todd?
No, I'm just what Faya said. We've been a part of a mastermind. We've been meeting every Saturday in addition to this mastermind as an accountability group. And we were just all super excited to see Todd's success in this. So he gracefully agreed to come on and talk a little bit about that. So without further ado, Todd, we'll let you take it from here. Welcome, Todd.
Thank you. Thank you. So, a little bit about me. My name is Todd Snelling. I live here just outside of Cincinnati, Ohio. And for the past couple years, I've done the ADD of investing. So I buy something, sell it, buy something, sell it. At the time of this, I had two doors. I was holding two doors. But in the year prior, I had underwrote probably 70 to 80 deals and nothing worked out. And I'd underwrite these deals and they wouldn't work out. And I would talk to brokers. Well, in the back of my mind, I've always thought to myself, what if one of these says yes? What am I going to do? Like, nobody that I'm aware of goes through the training of what you need to know, what are the steps to closing a deal. So that's kind of what we're talking about today. We're going to talk about the purchase and sale agreement. I've changed a lot of information in here just to protect some of the people. Excuse me. So we're going to kick it off. This anatomy of the deal. I'm going to do this one. I'm going to do due diligence, and then I'm going to do one called what's next. What happens after your closing? What I'm going through right now. I'm learning a lot. So I thought this would be cool because I don't see this being taught anywhere. So this is not a lecture like in a college. This is not instruction. It's just me telling you what I learned. If you have a question, feel free to blurt it out. You don't have to wait to the end. I want this.
Hey, Todd, can I touch on that really quick?
Yes.
So Todd just mentioned that there's going to be three topics that he's covering. So this is a three-part series, and this is part one of that three-part series. So the next one, he'll cover the due diligence, et cetera, and it'll go on from there. So we'll have one in November and then one in December as well. And then you said something, Todd, that made me have a question for you already.
Okay.
Okay, so you said you were talking about you had a couple of units or a couple of doors before you got this one, and you're just analyzing, you got told a lot of no's. So in your mind, what was in your mind? What was your mindset when you kept getting those deals that weren't working out? And how did you get through all of that hard work, all of those no's? Like, what kept you going? And is there something that shifted in your mind?
So I kept thinking to myself, am I at the point where most people quit? I had underwritten so many deals. I had filled up a hard drive on one of my computers. And just because I was throwing documents in there, I was talking to brokers, and I was always 15, 20% too low on my offers. And I got real frustrated. In October of 2024, I went under contract to purchase a building in North Carolina. We did a PSA on that particular building, and then we went to due diligence. We discovered a problem, and on the very last day, and I'll talk about deadlines here, but on the last day of a deadline, we dropped out of that deal and got our money back. That's probably the lowest point for me that evening, because I figured That may be the closest I get, but I thought, man, I'll just keep going, keep going, and keep going. And then in January of 2025, I got a text message from a guy who was part of that deal and said, I think I may have something. I want your opinion. So that frustration was pretty big. I'm not going to lie to you. It's pretty frustrating at that point. But when this guy called me, I knew this guy to be a pretty good operator. He said, I'm putting together a team. I'm going to send you the underwriting, and they've accepted my LOI. Tell me what you think. So I said, well, tell me more. We met on a conference call, and he said, I'm going to buy 2 different buildings for $10 million. And I said, okay. Now, I've never looked at anything $10 million yet, that big. But it was made very clear that on this deal, I was going to have to raise money. I was going to have to come up with the GP team was going to have to raise somewhere around $2.2 million to get this thing to the closing table. That's down payment, all the costs associated with, all the fees, everything. And then somehow figure out and operate this thing about 8 hours from Ohio of a deal that's about 8 hours from me. So that's what was presented to me that night. I had never raised money before. And frankly, I'm going to go ahead and use this term. I mean, I'm a big guy, but it kind of scared me to death, really. Knowing the other team members, knowing they were pretty good operators, knowing the expectations, it was something that I struggled with that night, to be honest with you, and going forward. Before you get to any PSA, you have to decide if it's a deal worth doing. Who's going to be your team? I'm lucky. This is a good team that I'm on. I put trust and experience in here, but I'm going to be honest with you. That trust and experience was me. Do I trust myself to take this leap of faith, and do I have enough experience? I think we all go through this. People call it imposter syndrome. They put it on different names. I went through it. I'll just tell you right now. And that last one is, can I raise money? And if I raise money, I want to raise more than these other 4 guys? And I don't know, that's an ego thing to me. I probably shouldn't say that out loud, but I wanted to try and show these guys they picked a good partner. So when we met and decided to go forward, they hired an attorney out of Oxford, Mississippi. So most of the details you'll see here, I've changed a little bit just because I didn't want people's personal names out here. But I talked to this guy and I said, your name's going to come up. And he said, go ahead and share it. So the guy we hired is named Kyle Swafford from the Swafford Law Firm in Oxford, Mississippi. I had, prior to this, I did not retain Kyle. He was already retained. He was actually sort of part of this deal already. I had seen Kyle speak at a conference and was very impressed with him. And what impressed me about Kyle was he came on like a guy that knew how to do multifamily deals, all kinds of transactions, but he spoke a lot about what not to do. He had seen a lot of deals where he said, don't do this. I've seen a guy do this once. Kyle's an investor himself. He knows what you're looking for. So the one name that I'll keep consistent throughout, and the one name that's real, is the guy we hired, because I would refer him to anybody, and that's Kyle Swafford. He's a good guy to have on your side, because he gave us advice on why would we do this and not this. I've used Kyle on another deal I tried to close. Was very satisfied with him. So that's Kyle. Feel free to contact him. Feel free to use my name if you're looking at a deal and you need. He's been awesome for us. I'll tell you about one thing Kyle did on this deal that was pretty awesome for us. So for those of you who don't know, the term purchase and sale agreement is very similar to the contract you buy on a house. I'm not an attorney, but I thought I would go through some of the terms that we're going to talk about that you may be familiar with and stuff you may not be familiar with, because there was a lot of things that happened that kind of shocked me. And there's a lot of things, I wouldn't do a lot of things different, but I'm going to tell you some things you should probably do on your PSA personally. So at the start of your PSA, you always get the basics. What's about to happen on the start of the contract day, which we call the effective date, April 9th, 2025, I'm going to buy what we call 3 units. Now, this is kind of a legal description. Kyle took care of this, but it lists the seller, the purchaser, how much we're going to purchase, and who's going to the title. That's a lot of times, that's the first part of your PSA. A lot of attorneys will do it different, but we've all seen this in home contracts we dealt with or whatever else. And then
hey, Todd.
Yes.
Can I just stop you, ask you one question before you get into more details?
Yeah.
So before you started going into the basics of this, you talked about like a lot of your team members,
Right.
right, that you work with. So obviously buying a multifamily, buying multiple units is a team effort.
Mhm.
What did you do to gather your team? How did you start networking with people? How did you start meeting people? I know you went to a conference for Kyle, right? But like the
Right.
person who texted you the deal, how were you in contact with them? Can you give us a little bit of background on how you developed those
Yes.
relationships?
I knew the guy that started the deal has a partner. He said, "This is the team that I could see really working this deal. It's me and my partner." He gave the names. And then he mentioned a guy who actually lived near this building. He would be boots on the ground. If something were happening to this building, he could be there. And then he mentioned another guy. He knew this was my first deal. There's another part of the group. He knew it was his first deal. He said, "I think this is a good deal. I'd appreciate your input." I had known these guys from a different investment group. We had talked a couple times, but we weren't close at all. Was this random? I mean, he's never told me it was random. He just think, "I think this is the team that could close it." This is a very different deal, and there's three in this particular building. There's residential income, there's commercial income, and there's what we'll call event space income. So there's three different incomes here. And he basically said, "I need a diverse group." And that's how the team came together. On that first night, we decided what our roles would be. So we decided who would handle asset management, who would kind of work with the title and the attorneys. Um, the first thing we learned is that only one person of your group should deal with your attorney. Maybe two at the very most, but your attorney will want to deal with one person of the group. So it's a back and forth, because if you put another person on your team, it gets confusing. It gets confusing for your attorney. I think Kyle will tell you the exact same thing. So we decided that night who would deal with Kyle, and that was the main person. He said, "I've already talked to Kyle. I'll go back and forth between Kyle and the broker and the other side." Does that answer your question?
Yes, that
Okay.
does.
Okay. So the next thing is the terms of your purchase. I'm going to talk a lot about timelines and how to protect yourself in timelines. The next thing is the purchase terms and when that money is due and what exactly is due. We decided to give money a $25,000 deposit on a $10 million purchase, which kind of shocked me. It went that low, but we would submit it within 3 days of the effective date. Remember, the effective date is the day your contract starts. So by April 12th, we had to submit $25,000. And then if we were going to do an extension, each extension would cost us $5,000. This came up several times during the negotiations as we got to closing, because we made sure our $5,000 went to closing and wasn't a penalty. At the end of this contract, we got into an issue because our finance company was slow in getting documents. We went past our extension, or excuse me, our closing date, and had to ask for an extension. So you can see here, notice 2 or 3 days before the closing date, we've had to exercise that twice and pay $10,000 more to get to the closing line, but we got that $10,000 back.
For
So,
your initial deposit, is that something that you guys personally took care of? Is that something that you guys got financed? Is that something you raised money for?
so one guy, so we haven't raised any money yet. One guy put up the initial deposit and agreed to put up the extension deposits if it came to it. When we did the numbers at the end, he got paid back, if that makes sense. He got his money back at the closing. So the balance at the closing was not, you see the $9 million, how that would be paid at the closing date on the day of wire. And then there's a deposit becomes non-refundable after the inspection period. I'll talk a little bit about the inspection period next, but I'm just going through how your PSA will be blocked out. One of the best things that I learned on this deal, which I would strongly encourage you all to do, is sit down with your PSA and write a list of deadlines. This will come up. You'll open this document weekly to make sure you're hitting all your deadlines. So our document had key dates in it, when certain things were due, when the title commitments were due, and somebody on our team went ahead and did this. They laid out what the start dates are for each time. So there's the effective date. That's the date the contract becomes valid. Okay. Then it's a due diligence receipt. So basically, our inspection period started 30 days from due diligence. Okay. So basically, we had 30 days to go to the building, inspect it. do our due diligence on the building, physically look at anything we want to do. Do we want to look at the sewer? Do we want to inspect every unit? Do we want to have a phase one inspection? All that's considered in the inspection period, and that was 30 days from the effective date. Now, there's a key concept here that you'll notice the word receipt is in due diligence receipts. If I'm buying a building from Cindy and I give Cindy a list of 25 documents and Cindy sends me 20 documents, my due diligence period has not started yet. Only when you receive all the due diligence documents does your inspection period start, and that's a big deal. I tried to do another deal where I got half the inspection documents, and then the deal went bad. But you'll see things like title commitments due, a title objection deadline. So if you're buying a $10 million building and 5 years ago there was a $30,000 electrician bill that's not paid that showed up on title, I had to object to that by May 3rd. If I didn't object to that, I had to pay the bill to get it closed. So I would strongly encourage you to go through your contracts, write this out, and go through all your dates, vacant unit inspection window. So we were originally set to close on June 28th. I can tell you this deal did not close until the third week of August due to the extension periods and the issues with the finance company, stuff that comes up. So this is the biggest thing I think from this whole training is how often I refer to this and see at about in mid-May on the second building, we were told by, and you'll see a date that's not in here. I should have put it in here. The date when you can't get your money back. So 30 days after the inspection period, you're typically going to lose your down payment. And about 26 days into this, we were informed that the second building we're going to buy has a roof that needs $100,000 repair, and the seller did not make concessions on this other building, which was valued at about $2.7 million. So we quickly came together as a team, called Kyle and said, this is happening. And Kyle said, you have 3 days. I have to send a letter if you want out of that second building. And that's what happened. We met with Kyle. Kyle cranked a letter to their attorney and said, we're exercising the option before the due date. We now only want to buy the larger of the two buildings. This rubbed a lot of people the wrong way, but it was the right thing to do. Had we not known the date or knew the date laid out, I can tell you that this date landed right around Memorial Day, and I think we backed out of the deal Friday evening at 5 o'clock before Memorial Day. So when everybody tries to start their long weekend and stuff like that, Kyle was available. He did it for us, and we saved $100,000. So that's a point there, just a reminder of the days. So you'll look at, when you look at your PSA, you're going to see the word conveyance, and it basically means, what do I get for my money? In this particular case, I get the building itself. Sorry, my dog's whining here. Sorry, guys. I get the building itself, but I also get all the personal property in there, appliances, everything else. This particular property had some artwork that we wanted. We got some of the artwork. I get the website of this building. This building has a name to it. It has a website. I get all the leases and deposits. Remember, they're still collecting leases. They still carry a list of deposits. This is a 100-unit building. 100 unit times the average deposit is sitting in the bank account for the seller. I get that money because now they become my tenants, and I have to refund that. And I don't want to pay that out of my pocket. I have to honor all the leases. I get, again, the security deposits and any kind of vendor maintenance contracts. I have to know what they are. That's part of our due diligence. We'll talk about that later. There's things in there that may be owned by him that he's excluded. But let's say you buy a building that's got a big statue in the middle of it, and that statue is pretty cool. I would put that statue in there as I'm getting that statue. Hey, I'm interested in the statue. I want it to convey with the property. So that comes up quite a bit. That's typically what you see on conveyance. The due diligence periods I talked about, it was 30 days to inspect all the family units. We had the option to do a phase one environmental study. There was one done years ago on it that we decided. But the PSA said, if you're going to go really invasive on this, then you're going to have to pay for this phase two. And then if you step foot on my property, we had to come up with $1 million in liability insurance just to step foot on the property and kind of dig around. Now, this is the key thing, and this is what's happened on the smaller deal. Purchaser can terminate for any reason before the end of the inspection. So if I thought I couldn't raise the money, this is a big deal, and you see a lot of people do this. They'll go into a deal, they'll find something weird about it, and they'll say, you know what, I'm out. And you don't have to give a reason, just say, I'm exercising that right, I'm out. That's a big deal. So I think
that's true. Is that true on every sale that occurs?
Yeah, so it was true on ours. Now it depends on how it's written in there. I think that's a lawyer question, right? But I know a lot of people, and Malika, probably you do too, and Cindy, that have gotten into a deal, gone through due diligence, found something weird, and been like, we're out.
Absolutely.
Yeah, it happens. And a lot of people, I think, I looked at another deal and I was worried that this would happen. You know, when we do underwriting, we budget for capital costs. Sometimes you go and you do an inspection and you realize, hey, the roof needs replaced or the sewer needs replaced, and your capital costs are 3 times what it would be. You may say the deal's not worth it, and that's when you walk away.
So is it the type of thing where you would present what that issue is and see if it can be used to negotiate different? Okay.
Yeah, absolutely. You would go back to the table and say, you failed to disclose this, right? So if you want to rework the deal, you know, one of the things we did here, we inspected the sewers. We paid for a guy to run a camera to the sewer, which went, you know, there, went under the street, obviously hit in the middle of the street. If that sewer was bad and I went back to bar, that would cost me maybe $50,000, $70,000. I'd have to tear up the street, a public street, just to fix my sewer. So,
hey, Todd, when you said that your lawyer sent the letter for that one property and you backed out and you said it rubbed people the wrong way, was it you're talking about the sellers it rubbed the wrong way, people on your team, your investors, or who did that? Was that an issue?
Well, I mean, think about it. You're saying to these people, hey, I'm going to buy this building for X amount of dollars, right? Mm-hmm. In this case, it was like $2.7 million. And now you're going to say you're not going to buy it. So now this guy's got to go back and put this property on the street. But keep in mind, this is 2 buildings. And we told him, I want one, not the other. Mm-hmm. He can't pull the second building that we want away from us. There's really, I mean, this guy was very reasonable, but, you know, it's going to rub some people the wrong way. I'm not going to, basically, you're telling someone, I'm not giving you $2.7 million for your building. I'm just going to back out and you're going to have to start over. So
something to consider for us, like buying and selling, right? So that can happen from the seller point of view as well.
Absolutely. Yeah. So, so that's due diligence and inspection. That is a big deal. Our next talk will be on due diligence. It's one of my favorite things. Again, I would strongly suggest you create a list of dates that are due. And then what happens at closing? What happens at closing? Well, this particular building closed in mid-August. I want partial payment for the rents. I should at least get some money. So it gives me a prorated rent. I get all prepaid rents. In case Cindy's prepaid for the year, I get the money she's prepaid, delinquent rents. And here's an interesting thing that went there, the vacant unit credit. I get $2,000 per unit of any unit that's not rent ready. This guy, one of the things this guy had to do is keep occupancy up to 90%, and he was not allowed to just not take care of the property. So if I would have showed up 3 days before our closing and did my final inspection like we typically do on a house, and 6 of the units were not rent ready, he would have owed us $12,000.
Todd, I assume that's something that you would have the lawyer put in the paperwork.
Yeah, so that's not something I thought of. right?
Okay.
That's Kyle. That's Kyle being Kyle. And then he's going to cancel his insurance. Kyle, there's a couple other things. I mean, a lot of this, I guess, is your attorney is standard language, but Kyle's the guy that thought of this, right? But I'll put this in every one of my deals. It talks about what we paid. This is what the seller paid. This is what we paid. The survey and all this other stuff. And then this is also stuff that we get. I mean, we get the leases and the tenant notice letters, the owner's affidavit. The owner had to sign and say they're called estoppels. He had to sign and tell us that all the leases were good. He had to sign off on all the leases and prove that Cindy in 401 was actually paying $1,200. And then we had to provide, obviously, we had to provide the money. And we had to provide the closing dockets and the proof that we could buy it. So when we bought this building, we set up our entity per Kyle's instructions. That's the entity that bought it. Kyle handled that. We turned those paperwork over to the seller. Again, there's the 90% economic occupancy that he had to meet. So I thought this was pretty interesting. If you own a building and a tornado knocks it down, it's greater than 15%. We could just walk away from the deal, which is interesting. I never thought of that. But it makes sense. I'm sure it's happened somewhere else. It's just these things that come up time and time again. Again, the critical time frames on this, I can't harp on this enough. And then the last thing you get into is defaults and remedies. What happens if me and the owner, us and the owner have disagreed on certain things, but it's very minor stuff. But what happens if you truly disagree? And I believe that this owner violated some part of our contract. This basically explains how it would be, how we would go to court. And it basically says that in any dispute, the party attorney privileges are entitled to attorney fees and everything now. So the PSA takes it through every part of the process. Just a little bit about our PSA. I'm a numbers guy. I've always been a numbers guy. If you like to read, go read a PSA. This one's 42 pages. It's 13,000 words. It took 2 months of back and forth with them to complete, and it is a brutal read. It is a typical lawyer language breed, and that's why you bring in a guy like Kyle. However, I will say this. I did read it. It took me a long time to read it because I can't stand this stuff, but I learned a lot reading. So, again, I'm not an attorney. I think that's kind of what I went through with the PSA and what happened. The dates are the biggest thing, but understanding what goes in the dates and what are your timelines and what you can do. That's kind of all I have. Does anybody else have any questions? Cindy has
Todd.
Well, I had a question. Now I can't remember. So I was telling myself, what was I going to ask? Is that other building still for sale?
So supposedly it is. I don't know how, and it's hard to say. We've offered to look back at that building. It still needs $100,000 repair. They've been kind of non-responsive, but I'm hoping they're non-responsive because I think they realize we got this building at a good price, a really good price. In this particular area, there was an article yesterday. The developer wants to come in and put in $100 million development right down the street with restaurants and bars and all kinds of stuff. So I'm hoping that maybe he thinks I'm not giving him two good deals. That's what I'm hoping. But I would buy that building if it came back.
Todd,
Yes. Oh.
You mentioned that you had underwritten like 70 plus properties prior to being contacted to join the team that was eventually able to close on this one.
Yes.
Can you share any information regarding how they were able to come across a property that was reasonably priced, particularly in the market cycle, part of the cycle of the market that we're in right now?
Yeah. So this one, like I said, is fairly different. This one was operating at 100% occupancy with market rate rents. So I think most of us that underwrite the deal would say first, this is not a deal. Then this particular building has what we'll call artist studios. We're now calling them like flex spaces nowadays, open office airspace for entrepreneurs. And then it has this event space. The event space just was not operating. They're tired of doing it. Our plan was to operate the event space to drive up net operating income. It is a very different deal than what typically I've underwrote, right? The whole goal of real estate is to drive up net operating income. So when we underwrote the deal, we barely increased rents. We increased a little bit of rent we barely increased rents on the residential. We did a little bit of underwriting increases on our artist studio / entrepreneur flex spaces. But when we operate this event space, this is what drives up net operating income. So it's a very different deal, but the concept is still the same. How do you drive up net operating income? So hopefully that answers your question.
I still have a question from that because I think Malika was asking, like, in our economy today, you're running across all these deals that you said no to, right? 70 plus deals.
Right.
But how did this deal, I don't know if you know, like, how did they come about this deal? Like,
this deal was actually on market.
So it was listed.
Actually on market, and the main partner who brought me in the deal drove by it and looked in the window and said, well, this is kind of interesting. And we had a really hard time underwriting this because of the different revenue streams. Each revenue streams has an assigned group of expenses to it, and how would each one affect the bottom line, if that makes sense. So when we first underwrote it, we looked at it and said, this doesn't make any sense. How do we tell people that this is what we're going to do? So our underwriting changed 2 or 3 times. But this was a deal that was on market. It just everybody was worried about the residential spells.
Got it. So was this like on LoopNet? Was it listed on LoopNet or what?
I think it was on LoopNet. I'm almost positive it was on LoopNet or Crexy. It was on one of the two. But this was offered by a broker, and we went back and forth with the broker. And
were you typically looking for properties when you were analyzing deals prior to this? Were you looking for properties on LoopNet? Were you contacting brokers? What was your strategy?
So my strategy, again, I looked at a whole bunch. I underwrote a lot of properties for other people. I was going on LoopNet. I was talking to brokers. And then about halfway through the year in 2024, I kind of just took a leap of faith and told any broker I talked to, I'll show you my underwriting and you show me yours and you tell me where I'm wrong. And I've had brokers say, okay, and to this day, they'll call me and say, underwrite this and let's compare. So I just did one the other day for a guy, and I said, I'm at this, and it was an apartment building, $700,000. I said it's worth about $550. He said, I know, but somebody will give me $700. So what do you do with that information? You know what I mean? You just keep going, you keep plugging along. So, if the next deal I underwrite, I share with the broker, I share with the seller, this is where I'm at, and this is why. Because they'll try to calculate a net operating income, and I'll calculate a net operating income, and we'll be close. We'll be close. Now we'll argue about insurance costs, we'll argue about maintenance costs, we'll argue about management fees, but the brokers really respect if you can do that.
So that's a piece of advice that you offer to people when you're working to develop those relationships, to make sure you're sharing your underwriting so they understand why the deals they're bringing to you aren't working for you. Yeah.
So if I'm going to put an LOI for $500,000 or $550 on that building, he's going to call me and say, why is it $550? It's $700, it's $750. And I'm like, this is why. Because my net operating income is this per year. What is yours? And they're like, oh, well, mine's higher. Well, of course, you've raised rents. I don't think I can raise rents, but this is why. So you get a lot of respect that way, as opposed to just submitting out an LOI randomly, which I know some people do.
We have a question from Charles. He said, how do you determine cap rate in a different area?
I've kind of gotten away. That's a great question. So especially as it comes to this one, because I will look at CoStar. We all look at CoStar. I will talk to the broker and see if we're close, particularly when we share underwriting. But I start looking more and more at price per unit than anything else recently. I look at past deals. I got a deal today from Cincinnati, and it was $52,000 a unit. So if I know that's $52,000 a unit, and I'm being offered an apartment building 2 streets away, and they want 67, we're not on the same page. So I'll call that broker and say, this one over here just sold for 52. I will, to answer your question, I will use CoStar. I will talk to the broker. I'll compare those, and then I'll make a decision from there.
And you're doing market research, right? Like in the area. I think you tapped on that.
Yes.
Okay.
Yeah. So this has been a predominantly, I mean, Faya knows where this place is at. I would guess a C class neighborhood, B minus class neighborhood, but this area is about to explode. That was one, they're bringing a casino in and they have all these ideas and they're building, particularly right around. You can drive down this block where this building is and see construction workers at every building. And people are talking about it in bars and stuff. And we were in a coffee shop and I heard two gentlemen talking about it a couple of weeks ago, and they were talking about they were going to make an investment, and I felt like saying, "I've already got one, boys," joking around with them or whatever.
You should have.
I should have, but you know what I mean. I mean, people can see it. People can see it coming. So,
yeah, I think that's important that you touched on that, like the market research. So you're looking when you're doing your market research, you're looking at rents comparable in the neighborhood. You're looking at what businesses are bringing employment to the area. Right. You're looking at any attractions like casinos, adventure park, I don't know, different things. Is there anything else that you would be taking into consideration when purchasing?
I mean, for me, it's just the area. One of the things I did with this area, I had my 17-year-old son with me, and I said, turn your camera on, we're going to drive around. And when we drove around and went back and watched it, just the amount of construction. There were these older buildings, but in front of every building was some type of construction vehicle, some type of white van. There was guys in hard hats pouring concrete. I'm like, this is at every building. So then when I saw one for sale, I would write down what it is and I would compare it to what they're getting and what they're asking. I love driving around my investments and just seeing what's around back. You know what I mean? The coffee shop that I was in was very industrial. It was brand new. There was a ton of people in here. And I'm like, oh, that's interesting. This particular place had a $25 million hotel renovation just done right next door. So when you start to put all these things together, you're like, okay, I may have something here.
Todd, you mentioned that you were underwriting a lot. There are other people out there who would like to be able to underwrite and have conversations with brokers. Do you have any advice for those people, like maybe a particular underwriting software or tool or things to be aware of or how to develop their skill in underwriting or any other type of advice for people?
I would think the best thing you can do, because I talked with someone about this the other day, is know what it costs to operate in the area that you're investing. So I'll tell you what I mean by that. What do you think an average property manager is going to cost? What do you think your insurance are going to cost? So right now, the Wild West of operations is real estate taxes and insurance. So if I'm Charles and I want to invest in Atlanta, Georgia, in a certain part of Atlanta, I want to know how my real estate taxes are assessed. Are they assessed on the sale? Are they assessed yearly? What my insurance rates are? What my property management fees. You could almost call, I know here in Cincinnati, I can call Duke Energy, who's our big energy supplier, and ask them, what does it cost to operate certain buildings in their area? They'll tell you what it costs, right? So if you have a building that's metered individually, but you have to pay for hallway electric and hallway heat, and you're interested in 123 North Main, I would call the electrical supplier and say, what was the billing at 123 North Main? When you put all this together, all your list of operating expenses, you'll have solid numbers. You deduct that from what you think the rent increases are. I think most of us know how to find rents or what they are. Just go by your market. That's your net operating income. If you know your net operating income, you're 75% there, because that's what you're going to go back to the broker and say, I can make $60,000 on it. And he'll say, no, I can make 90. And you're going to say, no, I know that I'm underwriting between $500 to $700 in the Midwest for insurance per unit. And when you start talking to brokers like that, they'll be like, well, that seems high to me, but they'll change the subject because they know you know what you're talking about. So my advice would be understanding what it costs to operate in your area. As far as the software, I use a bunch of different ones. I mean, I probably have 10 different ones. They're all different. I would find one that's the most comprehensive to include the total cost of the deal. This deal cost us the amount of the building, but it also, we have fees involved, we have attorney fees involved, closing costs. This particular deal, we did not have a lot of capital expenses, but that's going to be part of your underwriting. That's money you may have to bring to the table unless you're going to pay for it. So I would be sure to find one that is inclusive of all costs related expenses to acquire that building. Because our check at the end was not $9,975,000. It was more than that. It was probably another $200,000 in closing costs.
I think a mindset shift that I had is when I was at first analyzing apartment deals, right? Everything seems so overwhelming with everything. But if you just break it down exactly how Todd just said, like, what's your NOI? Like, look, this is a business, right? So however you're running a business, you're looking to make a profit. So like your cost versus your profit, that's what's obviously going to matter. So just breaking it down that simple, I think is very helpful. We have another question. Can you talk about how to raise the capital for the deal?
Yeah, and I can, and I'm going to be honest with you. I didn't know what I was doing. I relied heavily on somebody on this call, Cindy. I relied heavy on a couple other people who are known to be capital raisers. And then basically I molded myself into their own style. So with Cindy, she made the introductions and I did my pitch, and Cindy has heard my pitch so many times, she probably could have done it for me, but she's more comfortable with me doing it. A couple of my other capital raisers, they took my information, they pitched it to their investors, but then they would call me with questions. What about this? What about that? Or whatever. There are some of the investors who invested a little bit less money asked me more questions, and then I have one investor that asked me one question, and she invested $100,000. And it's different. I mean, you have to make yourself available to your investors, but at the same time, you have to find the connection with them. I still, to this day, starting in December, I will start sending my investors not only get a newsletter from the deal, they'll get something from me. Hey, this is Todd. This is what's going on. It's a little bit more personal because they invested with me. I owe them that. There's a lot of bad communication out there. They're going to start getting stuff from me and the deal team about the deal. Okay, so one of the things we had on this thing was we had an elevator problem in this deal, and the elevator needed this massive expense. So it was my job to repair the elevator, find the person to repair it. I had 3 bids to repair the elevator: $85,000, $65,000, $25,000. By the way, if you want to make a lot of money, go in the elevator business, because we went with the $25,000 guy. He ordered the belts from the same place as the $85,000 guy. I know for a fact this happened. So that tells you the markup in the elevator business. But my point to that is that's a story for my investors. This is kind of what I'm working on. I'm not sitting on my hands. I know a lot about elevators now, right? Because I had to protect your investment. And I think a lot of them like to know what they're buying, what they're getting into. Cindy calls it, what do you call it, Cindy? Tenants and trash and toilets. And a lot of people don't want to deal with that, but they want to know that, hey, I'm making money, or I'm part of this deal, or actually working. I just don't have to deal with broken elevators. So, anything else?
So basically, you armed yourself with a good group of capital raisers.
Exactly. And I plan on, personally building from this group, right? So I'm going to put it out and say, hey, this is the building, this is what we're doing, because I'm always looking for that next deal. And I believe I did raise more money than anybody else in the investment group in our GP.
Yeah.
Nice.
Congratulations.
Thank you. But like I said, it was the people around me that raised the money. I just made myself available.
Are you able to speak to how you raise capital using other people? Like, what's in it for them?
Yeah, so basically, they get to be a part of the GP team for investor relations. They bring people to the table, and they become a small part of that GP team to handle investor relations. So if I've got an issue with one of Cindy's investors, I go to Cindy. Cindy, can you make this phone call for me? And this happened quite a bit when they were signing up in our portal and stuff like that. And I need such and such as information and stuff like that. So there's an incentive to be part of the deal. Cindy has been to a couple of GP team calls where she hears us talk about elevators and hiring a cleaning person and why does the floor look like this on this floor, and hear the actual problems. And then she can pass that on too. And Cindy takes this knowledge and then she goes out and she does her own thing too. Um, but certainly the structure, I've learned a lot from the structure. Cindy could probably talk about this a little bit too. Our structure meetings, we talk a little bit about one guy deals with our asset manager on site there. He's the communications. We backfill him with information, but one guy makes that communication to make it smooth. But we're all in part of the deal. Cindy's part of GP discussions.
Cindy, do you want to give like a little blurb about how you feel about working with Todd and becoming raising capital and being a part of it?
Todd was fantastic because I do think it's important for people who are investing to know who they're investing with. And I do, the people who brought money to this deal, they want to know, like, and trust the people that they're working with. They're not going to just throw their money in there without getting to know that person, their personality, and things like that. So Todd, even though he doesn't love capital raising, he actually is really good at it because he's a great communicator. And I just, my lane is just knowing people and reaching out to them and telling them I have a deal I think is really great, and this is why. Let me introduce you to Todd. So that's basically what I did. Yes, and I also enjoy being on the GP calls because I'm educating myself. So hopefully one day I will be a Todd, and maybe I'll have a building of my own. So you kind of work your way up. I started out with one investor on one project, and then on the next project I had a couple more, and then on the next one I had a couple more. So I'm trying to outdo myself every single time. So yeah, even one though is better than none. So that's what I do all day long now, is network and talk to people about how they can create passive income, how they can be rid of tenants, toilets, and trash, which I myself have learned I don't want to do. So that's a good thing too. I'm teaching people who are single family owners that, hey, it's time to move up. It's time to create more passive income. So, that's kind of what I did and what I continue to do every day.
That's awesome, Cindy.
Thanks.
Love that. What else? Faya, did you have anything?
Nothing at this point that hasn't been covered. I feel like Cindy earlier, I had at least 2 questions that I totally lost in listening to everything else.
No, I didn't want to interrupt because Todd was on a roll. And then
I know, yeah. And then by the time there was
and I have a million questions. I have a million questions. I know. So interrupt me asking questions if you guys need to ask. Don't worry. Anybody else? Do we have anybody else?
Let me check and see if there's more in the chat also.
I know you guys said this was a series. I have a question about the capital stack, especially since it was brought up about having additional people come on board and get a GP position with capital raising. How is that capital stack and like LPGP split created? Who determines all of that? How do you share that with people? Are you able to speak to that, or is that later in the series?
No, that's fine. You can structure a deal any way. In this particular case, this was a syndication in which 30% went to the GP team and 70% went to the LP team. I could have changed that any number of ways, but you have to find the middle ground on what you think investors would want. Okay, so I can give you 60% of the deal instead of 70, and I can keep 40, but then your returns drop. That's not going to be very enticing. You have to find that number that's good for both sides. Um, and particularly being a syndication, we knew how much the building costs, right? So we knew that there wasn't a lot of capital. So we had to factor in all the closing fees. And after all that, we had to raise, at that time, $2.2 million, which is a huge number. So you're like, okay, can we raise 2.2 if we give them 70% of the GP? Is that enticing enough that we think we can get 2.2? Because once you get past your inspection period, we're going to lose our EMD unless we know we can raise money. And there are times when I thought, can we raise this money? The capital stack on this particular deal, I can go through. I have to pull up my underwriting, but does that answer your question about how we got to 70-30? It's just a matter of your underwriting and where certain numbers fit in, and at what point is it a good investment for somebody that wants to invest in real estate?
Yes, you answered the question. And
Okay.
it's like this deal was really a great deal. And so that's what enticed a lot of investors, in addition to all of the other aspects.
Yes, because when you start calculating the different types of revenue and how it affected net operating income, it was a deal that everybody could understand. Like, okay, now I understand. This deal was different than, say, maybe a LIHTC deal where you explained to them how a government administers LIHTC. And that puts a lot of people to sleep, and it's not as exciting of a deal. So this deal was kind of fun to pitch too.
I think the growth potential in that area too was super appealing to a lot of people. If they knew about the area, or if they did their research to figure out what was going on there and what that area had been previously, that makes it super, super appealing.
Yeah.
Well, go ahead, Todd.
The equity stack on this was, since the first building went away, it was $1.89 million with 1.3 billion in down payment, $200,000 in fees, 145 in closing costs, but it's also another $240,000 in reserves required by banks, lenders, and insurance and everything like that. I mean, that's a big number.
Yeah. One of the other things, Charles is asking about how do you raise capital? Well, it's a team effort, number one. So that's Todd is better at analyzing the numbers. I'm better at raising capital, and because I have a lot of contacts and that's what I do. But my point is that I do, and because you were talking about this particular deal. So I send out newsletters and emails to my contact list, and I had been trying to get a gal to invest in another project. And she was just like, I'm not so sure about this. And then it's funny, I sent this out with the location, and she basically texted me within minutes of that email going out saying, I have been looking at this area. I want to buy something in this area. And so, part of it is just being in the right place at the right time. And the other thing is, if you're a capital raiser and you want to raise capital, it's just being consistent with your investors who want to invest in something, but they just want to find the right property for them. And this one, like Todd said, it cash flowed already. I mean, it's already a 2x multiplier just as is, but then you add in the event space and the flex space that wasn't being used 100%, and that's really where your returns go up. So when you're able to point out the benefits of the project, that helps bring in more capital and more investors.
That was great information. Thank you, Cindy.
Yeah.
Anybody else have a question? 1 hour.
Going once, going twice, going 3 times. I'm an auctioneer now. Okay. Well, thank you guys. We really appreciate you, Todd. We appreciate all of everybody's input that joined the call. Thank you all for joining. This was episode 9, the PSA. As we mentioned, this is a 3-part series, so please join us. We're looking at November 20th at 7:30 p.m. EST, and that's going to be Todd covering due diligence, which he's super excited about, and a lot goes into that. So that's why it's a whole separate part of the series. So thank you all for joining Capital Conversations. We will see you next time. Faya, any last words to add?
No, just, other than thank you, everyone, for joining. Thank you so much, Todd, for helping us with this. We work with Todd every weekend in our accountability group, and we go over a lot of this information, and it just seemed like something structured that a lot of people would be able to learn from. So I'm happy we were able to close out this year with this 3-part, potentially 4-part series, depending on how it goes. So we had our contact information up there. You guys will get an email from us with the recording link. And if you have any additional questions or want any additional information, you can just let us know.
And there is replays. I just forgot about this because we don't really mention this, Faya, but there's a YouTube channel up and there's replays of all of the past recordings if you guys are interested in rewatching any of those.
Yeah, so we'll add that link to the emails as well.
Thanks,
Thank
guys.
you, everyone.
Thank you.
Thank
Have a good
you.
night.
See you guys. Thank you.
Bye.